Uranium friends, checking in on the ETFs. URA, let's look. URA daily full. I posted this today, I think. Full look. I mean, look at the full short-term bear control. 5 EMA. It cannot even peak above it. All right. So this is full on sellers in full control. It's really, really that simple. Unfortunately, it doesn't sound good. We don't like it. Painful summer so far, right? Summer, sell in May, go away. Yeah, and so right now we've got this level holding, and that's really all we can say about URA uh, from that perspective on the daily chart. Now it is testing this level. If it doesn't, if this level doesn't hold, we're coming down to this level, right? And it's going to make some sense as we look a little bit deeper. I just noticed something on it. Fib, we took a look. We're going to look at a quarterly chart, okay? Look, so it, the people that are just like, I'm holding uranium for the next 10 years. Well, you look at this chart and you say, okay, I don't know what's going to happen after here, but the potential is really good for another leg up in many ways. And we've all seen it, right? So you have this is a great quarterly cup and handle formation in the making. It's happening as we speak. Pure technical analysts will say it's not because the right side already breached the highs of the left. $2 basically, right? So, but conceptually, it is absolutely the look that you want. So let's just say it's not a cup and handle because of that technical breach. You have great consolidation in a long-term uptrend. I would think if there's an Elliott, I'm not an Elliott wave guy, but they would say that this is a 1, this is your 2, and this is the beginning of the 3. That would be my guess. What an Elliott wave guy would say. I don't know if it's the case, but anyway, quarterly consolidation. We're in it now. We're tapping this 5 EMA. We could get some depth here. Still, we don't know. All right, but it is a quarterly cup and handle. The long-term holder that thinks we're going back up into these levels loves this chart. They love this chart, right? Anyone who's bullish in general, even if you've never touched uranium, you look at this chart and say it's bullish. I'm scouting entries. Monthly consolidation. The 12 EMA is broken here. So does that mean? What does it mean? Well, it's. Don't be surprised if there's continuation. What I want to show is this weekly because you do have this weekly head and shoulders type of deal happening right here, right? So there's your head and shoulders. All right, so we can consider this possibly the neckline, which is what? Let's just say it's 28.75, right? What's this up here? 33 or 30 for ease of math. All right, it's a $5 move. This is a $5 move from the head to the neckline, right? The math implies $5 move down for your 1-to-1. So what do we say? 27.75, right? So 22.75, $23 gets you down. I'll get you down to all this support down here, which is also the 50% retracement. So that's what this pattern would imply. That's all I'm saying. Key levels right now to hold, and if they don't, it makes sense that it's a possibility now becomes that you come into the structure where it lines up with lots of resistance points and support points over here. So, there's structure here in this level. Where is my rectangle? Here you go. So there's structure in this level. So it's a value area. It's just that's what it is. So logically makes a lot of sense. And if quarterly chart bulls, they might not like that because that is a deep, deep retracement, which reduces the likelihood of this quarterly bull flag from confirming. Really, these quarterly bulls do not anybody just in general because of this fib retracement. You don't want to lose. We don't want to lose this level. We don't want to lose this 38% retracement level because the yellow flag comes out, and then once you hit this 50% retracement level, it gets a little shaky. But that is where this structure is. So, yeah, breaks this level, it's coming down here possibly. That's the way I'm looking at it. I said the 4-hour charts are important with the space. There's no difference here, right? So small signs that there's at least a bottoming process occurring here. So all of these looks are different, right? These are different looks. This is just V shape, no confirmation of a trend change with any follow through to a new leg down, right? So V shape, new leg down. This was a good little pop. The whole space got it. Regardless, right? Complete and utter fade there. And that was a confirmed 4-hour trend change. So that was a big, big fake out. Probably painful for a lot of people who chased and didn't cut after this level broke because now they're down here. So we take those. You can take these. In my opinion, I take these entries all the time. It's the summer, so I really wasn't paying a lot of attention. But I'm out after this level breaks. I know that there's a problem. This big sign. So anyway, different look, right? This isn't a V shape. This is a sideways consolidation. And that's what we're looking for in the space in general. So URNM, you can take a look at these daily charts on all these names, right? And URNM has a bit more torque, obviously, right? So it's down. This one has got to be on a daily also, URNJ. All right. So it's down a little bit more. URA is holding these levels. URNM has not. URNJ has even led URNM. So the leader on the way down, no question, is URNJ. Juniors make sense, right? Second place on the way down is URNM. Does URA hold and get these guys to bounce, or is it following? That's what it comes down to. URA is where the institutional money is going to be. URA has a much better option chain of the ETFs. There's larger movement here, so there's bigger money and probably slightly more holders. It also has non-uranium minor names in it that are kind of giving it a little boost too. Regardless of that, see what the space is doing. URNM. So slight relative strength with URA, by the way, against these other ETFs. And it's just retail capitulation, I would assume. So URNM, at least it's getting sideways, all right? But again, we talk about it. Trends down, gets consolidation, trends down, another leg down, gets consolidation, another leg down, consolidation. This is all still consolidation, new leg down. So this is a great consolidation here where you start to say, okay, we have a shot here. Fake out, gone. All right. So same deal. We're going to start looking at it the same exact way. A lot of support in here. There's a lot of supply. If it breaks, you know, support wanes big time down here. Don't want to think about it at the moment, but the Bears are in complete and absolute full control here. Excuse me. 12 EMA, far, far away above. So, you know, commodities love to ride. When they ride, they ride. 12 EMA ride all the way up. 12 EMA ride all the way up. 12 EMA ride. 12 EMA ride. Good bounce, recovery, some follow through. Now we're riding down. So you have to get those rides to change too. So Aggression levels become, these moving averages, they're math. They're not arbitrary. That's all I'm telling you. A little bit weaker than URA. URNJ, absolutely just getting smoked. Um, but it's the juniors, right? So key, important level, because then you start to lose support down here. Look at the volume profile. You can see there's some spots where it starts to hit, and they do coincide with structure in the name. Oh, that would be these are the next levels that you start to look down at, possibly breaking 20 if this 21 breaks. And then if 20 breaks, you could say, okay, possibly. And then my next spot's going to be 18. And one would think that 18 starts to be a pretty good spot. Here's your Fibonacci retracement, Fibonacci pull. It's at the 50% retracement right now. So does URNJ hold on the 50% retracement, which will increase the odds of the other ETFs holding, and vice versa, right? So we want something to hold somewhere along the way to help the other stuff go. Not a lot of data here for the monthly, but you can see this is a clear area. And you could probably expand this box. I like it better here, actually, believe it or not. I still like it better there. So that's a pretty good value area. And it's clearly below. So this is the last man standing here on this monthly candle. And so far, it's got a little break with no follow through. But pays to watch the monthly chart on this because, again, support wanes. So those are the ETFs. There's nothing special. Just look at the 4-hour on URNJ. Is there anything to say? Yeah, I mean, it's full on bear control, a little bit of sideways. At least the V shape, the waterfall down, is slowing down. It's just a question of does this new set of consolidation continue to a new leg down? That's what it's all about. So the 4-hour charts, for those who are interested in being super aggressive, or just interested in having an early look at whether this is the bottoming process, the 4-hour charts are the spot to be sector wide. Over and out.